What's up everyone, it's Caddy with MoneyVest. In this video we are going to be talking about Tesla stock, which has been on an absolute roar in the last 1 week, 1 month, and especially in the last 2 months since its low from back in April 22nd. The stock has just been ripping higher and higher. It's heavily shorted. Once again, there's a lot of hedge funds back at shorting the stock. And the interesting thing is that now we have over 99% of shareholders in Tesla back in the green, profitable in the stock. So earnings are coming up later this month. So Tesla is scheduled to report earnings at the end of July for the second quarter of 2024. And there were also some other reports that I want to break down with regard to Tesla's market share. As always, make sure that you drop a like and subscribe to the channel. I would really appreciate that. And let's dive right into it. First things first, Tesla's insane rally, as you can see, trading at just over $262 as of the time of this video. Pre-market's trading up to $264.50. It's my biggest position, as you already know. In the last 5 days, the stock is up a nice 20%, pushing up over $43 per share. This right here is the last 1 month, pushing up to over 51%, pretty much trading down to as low as 180 back in the day. And of course, it's up a nice 51%, pushing up almost $90 a share. And if you look at the stock price since April 22nd, when it was trading at just under 160, so it was trading at the time at around 157, actually it was trading down to as low as 145, if I'm not mistaken, in and around those levels. And of course, it has increased by over 84%, so it's almost doubled since its April 22nd low, with a very nice increase coming in towards the last 2 to 3 weeks, as I already mentioned. Of course, it's become a very overbought, which we'll take a look at that in the technical analysis as well. Now, this right here, Tesla is back to being one of the top 10 largest stocks in the world. I just had a power outage, so I do apologize for that. I'm gonna put myself here in the light. So yes, Tesla being one of the top 10 largest stocks in the world, overtaking Eli Lilly, to now the market cap sitting at just under $840 billion. And Charlie Bilio also tweeted talking about Tesla and down 43% on the year. So this has been one of the fastest turnarounds we have seen, or fastest short-term comebacks, because the stock was down on a year-to-date basis, 43%. And now it's after an 85% rally, it is now up year-to-date by 6%. I wouldn't be surprised if Tesla actually regains the momentum and of course pushes higher beyond the S&P 500, which of course is right now up over 17% on the year. So I wouldn't be surprised if it actually rallies even higher to of course trade much more than the S&P 500. So that of course is a possibility for Tesla. Now, moving over to this is probably one of the most important charts that I think everyone should be aware of, because this really helps us understand the overall cost distribution, the average cost basis for all Tesla shareholders, and as well as the total number of profitable shares for Tesla, which is now sitting at 99%. So less than 1% of shareholders now are not profitable on Tesla. 99% of shareholders are all in the green. As you can see that we are, again, enjoying this market rally. We were dollar cost averaging, we were buying in the 150s, 170s, 200s. And of course, the markets are rewarding patient, more objective investors with this massive rally that we're seeing. Of course, short sellers have a lot to do with that as well, but very excited to see that over 99% now of investors are profitable, which at one point, we've seen this number come down to less than 3%, less than 4%. So it's finally nice to see that majority of investors, in fact, almost all of the investors are now in the green with Tesla shares. This right here is a poll that I did in our Discord. So again, if you want to join our community, our MoneyVest community, and access the entire platform, this right here is going to be the platform that you can access. This is the beta launch that we have done, and you will have the early access to the entire platform. Of course, do your full fundamental analysis on individual stocks. Link's going to be down below. We're offering a 51% discount right now for a limited time. And again, you can do a full comprehensive detailed fundamental analysis, and eventually we'll be adding a lot more functionality, a lot more tools, a lot more features on the platform where you can track your portfolio, look at our macro dashboard, including the MoneyVest index, the fundamental and the technical positioning of the S&P 500. So a lot of really cool features are going to be available. So link's going to be down below, limited spots left. But this right here is the poll that I did. What is going to be the Tesla price by the robotaxi day, August 8th, and majority of people, 43% of our members voted for Tesla being well over $300 by the robotaxi day by August 8th. And the next biggest one was 23%, which we're expecting Tesla to be above 250, but not as high as 350. So somewhere in the middle, and about 19% of our members essentially voted for Tesla coming back down between $200 and $250. So basically coming back down in that range, and 16% are even more bullish, extremely bullish, expecting for Tesla to be $350 plus by the robotaxi day. So in other words, if you put things in perspective, almost 60% of investors, so that's 59, so almost 60% of our members expect Tesla to be well over $300 by robotaxi day on August 8th. And just again, keep that in mind that of course the momentum and the optimism is very, very high. So just go off of that. But it is technically very, very overbought. Now, Ross Gerber coming back around on Tesla a little bit. He was on CNBC, and this right here was the interview, and these are his words, and I watched the entire clip. He says, and I quote, "I don't understand why short sellers are so stupid. You just don't short Tesla. It's hard not to be a bull long-term on Tesla." Well, look at that. After commenting so much about Elon Musk's $56 billion pay package and short-term headwinds and calling the stock so many different things, he's finally coming around. What a surprise. And this is most likely going to be after, of course, the rally that we've seen. But this right here was quite an interesting interview. You could kind of see it in his eyes that he was really feeling the FOMO of Tesla's run-up and missing out on those gains and on those opportunity here. And Tesla shares of US electric car market falls below 50%. So this right here was another article, another catalyst that came out by Cox Automotive. So that right there was a firm that did the research study that Tesla accounted for less than 50%, so 49.7% of the electric vehicle sales from April through June quarter. That's down from 59% same time last year. And the research firm also mentioned that it's the first time the company's market share fell below 50% in a quarter. The firm is leading auto industry researcher, estimates market share based on registrations and company reports and other data. And the number are the latest sign that Tesla is losing its dominance in a market in an effect created in 2012 with its introduced Model S. Before that car, very few electric vehicles were sold in the US. Overall, the US electric car market or vehicle sales climbed 11.3% from a year earlier, and suggesting that consumer demand from the technology remains healthy, even if sales are no longer growing at more than 40% year over year. As they were last year, Americans bought or leased over 330,000 electric cars and light trucks during the quarter, accounting for 8% for all new cars sold or leased in the 3-month period. A year earlier, electric car vehicles accounted for 7.2% of the market. So I think we all understand and know that market share for Tesla was never going to be at over 50-60% forever. As they're delivering more and more volume, and yes, there's going to be competition, as long as the overall market grows, there is going to be a normalization in some of those growth rates and that market share as well. I would much rather have Tesla deliver 10% of a market that's about 100 million vehicles, which is still a significant amount, 10 million, then Tesla make up for over 50% of a 2 million or a 5 million market, right? So hope that makes sense, because as the market grows, right, as the numbers grows, because right now we've got 100 million combustion engine vehicles in the world, as they switch over to electric vehicles sooner or later, and as there's an adoption of electric vehicles, then Tesla's market share is of course going to come down, because there's going to be more competition. There's going to be more companies that provide electric vehicle solutions. And this is true for almost every industry that is first getting started. We had a lot of companies, airline companies that got consolidated. We had a lot of banks in the beginning that got consolidated to just the few biggest banks. And this is what happens with every industry. Eventually, sooner or later, there are mergers and acquisitions. There are companies getting bought out by other companies, and there's only a select few that are dominating the entire industry and make up for most of the market share. So yes, market share is going to come down, but as long as electric vehicle sales are growing, electric vehicle market is growing, that's good. If electric vehicle sales and market was not growing, was stagnant, and then Tesla was losing market share, I would be very, very concerned. But if their deliveries are growing, if market share is coming down, but in a growing industry it's coming down, that's also okay. I mean, the perfect and the ideal scenario would be the market is growing and Tesla's market share is growing with it, but that's kind of like the best case scenario. So like I said, I'd much rather have Tesla, dominate a 15 to 20% market share of a 100 million vehicle market than as opposed to a 60% market share for a much, much smaller overall market. So it is really important that Tesla focuses more on the adoption for electric vehicles than pushing their own vehicles. I think the industry size is always the starting point, and then where you kind of fit in that industry is what drives your revenue and profitability and all that stuff. Now, coming over to the other catalyst, so Tesla will most likely report low second quarter profits. So that right there was another report that came out from an analyst, Goldstein, and they talked about, this was from Morningstar, Goldstein tempers expectations regarding profit margins, stating he doesn't expect to see much improved profit margins and suggesting that margins could possibly fall in the second quarter. He notes that profit margins might increase if the automaker can address some operational costs in the latter half of the year as well. Goldstein acknowledges that the Cybertruck failed to meet quality standards and expectations. He remains optimistic, and with the upcoming U.S. election, Goldstein discusses the potential impact of presidential candidates on the EV market, noting the contrast between Biden's EV-friendly regulations and Trump's intention to roll them back. Despite this political uncertainty, Goldstein remains confident in Tesla's position long term. And again, we also did have a lot of short sellers take a big hit. So hedge funds that piled into big Tesla short, stung by, of course, the huge rally that we're seeing in a Tesla stock here. And I think they've accounted for about $16 billion in losses in the last couple of weeks alone, as Tesla stock has rallied as aggressively as it has. Now, in terms of the profit targets, let's just come over to analyst estimates, and we'll come over to the quarterly numbers just to better understand what that EPS expectation is going to be for the upcoming quarter. So you'll notice that the quarter ending in June 30th, we've got an EPS expectations of about 60 cents per share. That's going to be a 15.5% growth on a year-over-year basis and about a 21% CAGR. So 60 cents per share for Tesla is going to be that earnings per share. And I do believe that margins are somewhat susceptible to a decline. And the reason being, so you can see that estimate for EPS is also 60 cents for Tesla. As you can see on TradingView, we've got the same thing on our platform as well. We've got another power outage. I do apologize. So 60 cents is going to be that EPS. And revenue-wise, we're looking for, if you come over to quarterly numbers on the revenue as well, again, you can track all of this on our platform as well. Revenue expected for the second quarter at $24.5 billion, right, for the June quarter. And again, on TradingView, we've got 24 billion. So just a little bit less than what we have on our platform, but that is going to be the expectation from Tesla in the upcoming quarterly numbers. Now, if you come over to the fundamental analysis, and I really want to drill down on the last, let's say, 12 quarters, if I plot for revenue and then I plot for gross profit as well, you'll notice that margins have been coming down. And that, again, is somewhat concerning because we've talked about this, on our previous videos as well. Because of the price cuts and the cost of operations remaining as high as it is, we're not really seeing a lot of margin expansion. If anything, we're seeing margins coming down for Tesla. You can see gross profit margins worsening. They have been rolling over a little bit, especially over the last couple of years. You can see that we've gone from 25 as much as 26% down to last year being around 18%. And quarter over quarter, last couple of quarters, we've seen this number even come down to sub 10%. So margins really have been a big problem for Tesla on the back of these price cuts, which is really what's going to really dictate how well the bottom line profitability is going to be, because net income wise, also, as you can see, it's been coming down quite significantly. So you can see the net income from last quarter, March 31st, was $1.1 billion. So that, again, is extremely low compared to what we've been seeing from Tesla at well over 2.5, 3.7, 2.7, this right here, 1.8 again. So again, significantly more profitability, and that has come down because their cost of operations, their operating expense, and their cost of revenue has obviously increased. So if I essentially plot for total operating expenses and their cost of revenue, it has been increasing. Let's just remove for revenue. And if you take a look at this right here, this is their operating expense. It's been increasing every single quarter, right? So it's gone from about 1.6 billion, 1.7 billion to now last 3 quarters, they've been averaging about 2.3, 2.5 billion dollars. And then cost of revenue also, as you can see, that it's been a little bit more stable, although it is coming down as of last quarter. So that's good. But again, we want to see cost of revenue come down, operating expense come down, margins expand, and that's how profitability-wise, bottom line is going to be much, much stronger for the company. EBITDA, on the other hand, has also been coming down. As you can see, the EBITDA margins also struggling over the last 4 to 6 quarters. So that's exactly why, profitability-wise, I think we've got a couple more quarters left that the price cuts are going to take into effect, and as a result, the bottom line could struggle in the near term. But eventually, we know where this story is going. There's going to have to be a lot of execution and adoption from Tesla in terms of robotaxis, autonomous driving, Optimus, because this is really where the premium comes in. I mean, Tesla's market cap today, $836 billion, is because of the very fact that Tesla is being priced as a technology company. It's being priced because of robotaxis and Optimus, the robot, humanoid robot, solar, and of course the scale that they can provide with electric vehicles, with the newer models, cheaper models, and the Cybertruck as well. So that's the execution piece. Adoption is all of that going to be adopted by households and businesses? Are people going to be interested in autonomous driving and robotaxis? I've seen a lot of videos come out from Waymo, from Tesla Autopilot as well, and how it's driving itself and how it can be, again, a very, very significant productivity piece to the entire economy and revenue driver for customers, and just an incredible technology. However, when I look at those comments, when there was a video that was posted from Waymo, and they were essentially talking about how to not support this, because there was a Waymo driverless car which was essentially dropping somebody off. They were using that robotaxi, and a lot of the comments were like, "Don't support this. This is taking away jobs from actual people who want to make a living by driving cars or cabs." So there was a lot of negative sentiment in the comment section. So again, it kind of is a good case in point, or is a good case study for us to understand whether this is eventually going to get adopted or not. And a lot of things in the beginning are not well received, but eventually when we see the utility of it, when we see the functionality, when we see the cost savings, when we see everything involved in that technology, we come around, right? So that, I think, is very, very important, is that whether Tesla can execute and whether it will be adopted by the people and by the businesses. Now, speaking the technicals analysis here, very, very overbought, extremely overextended, well over 87 on the RSI. MACD also pushing higher very aggressively, with the L3 banker oscillator also pushing up. Again, coming up to that resistance at around 261, 262. This is exactly where we were back in December of 2023. That's where we got rejected and, of course, sold off over 40% for Tesla. So if you do see a breakout above this level, the next target is going to be all the way up to 275. So that right there is going to be that next target to watch for Tesla. But before we get there, wouldn't be surprised to see a bit of a pullback. But every day Tesla manages to close green. Every day it somehow manages to push higher. So if you do get a breakout above this, 275 is going to be that next resistance and target, all the way up to as much as $296 to $300 for Tesla. And again, support level is going to stay put somewhere around here in the 250s for the company as well. So let me know your thoughts down in the comment section below. Congratulations to all Tesla investors and shareholders. We'd love to know what you think about the company. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. We're offering a 51% discount for anybody who wants to join and lock that price in. You will have access to the entire MoneyVest platform, where you can do a full fundamental analysis on this platform, and of course a lot of other features and tools and functionality will be added over time. So links going to be down below. As always, happy investing, and I will see you all in the next video.